China is sounding the alarm about a global market bubble. And the US just penned a $1.9 trillion stimulus package. And with that, the US might have just passed the torch to China as the next world economic leader. Now, what does that mean for you? If you want to know more, just run the clip. Welcome back. Quantitative easing, or monetary policy, however you like to phrase it, is definitely going to have an effect on the economy. It might be positive in the short term, but in the long run, it's been known to cause significant currency devaluation. Just ask Zimbabwe or Tanzania. But is it the rising of China that we should be worried about, or is it the deterioration of the US dollar as a world reserve currency? For those of us that live in the US, or those that would like to come to the US, this is something that you should keep in mind, because your assets with the incoming inflation are definitely going to be affected. I have an article from CNN Business. It's titled, "China is sounding the alarm about a global market bubble." What I found to be very interesting is that the author states such a bubble bust could trigger substantial foreign capital inflow to China. And that's not it. That's not it. It continues to state a huge rush of funds into China could destabilize the world's second biggest economy by rapidly inflating its currency, assets, and prices. I have a video for you guys to watch, and I want you to listen very keenly to what is being said, because this here might just be the turning point. If you like this kind of content, go ahead and like this video and follow my page. I would also love to hear your comments. So let me know what you think in the comment section. Enjoy the video, and I'll see you next time.
This is a big year for China. It's the 100th anniversary of the founding of the Chinese Communist Party. They're at the beginning of their 14th five-year plan, and they're on the cusp of 2022, where they're going to have a leadership transition for the Communist Party. Of course, not any real mystery about who's going to come out on top. But the messaging, in this kind of year is naturally going to be very positive, very optimistic, and I'd say at this point it's veering on triumphal. Basically, the message is that the wind is at China's back. Coming out of the pandemic, China did fare the best economically of all the large economies. Xi Jinping, as you suggest, says that China is both, riding and driving the wave of globalization and technological innovation. There's a sense, I think, that, China is on the rise. It has Xi Jinping at the helm. The United States, in contrast, is viewed as, politically polarized, weak economically, and the message is that it has no chance of reclaiming its position as the world superpower. We've had three speeches by senior foreign policy officials, senior Chinese foreign policy officials over the past 2 months. They have said that they want to work with the United States. They want to find areas of cooperation, climate change, the pandemic, cyber terrorism, but that they expect the United States is going to redress all of the problems of the Trump administration, right? Going to sort of take care of the distorted view of China as a strategic competitor, take care of the fact that the United States does not respect China's core interests in Xinjiang, Hong Kong, and Taiwan, and take care of all the restrictions that it's placed on Chinese companies and media outlets and Confucius Institute. So I think what we hear from the Chinese leadership right now is a sense of, as I said, triumphalism with some lecturing thrown in, a little bit of openness, and a faint undercurrent of concern. I do think it's important, though, to recognize that if you go one level down, right? So if you move sort of beyond the level of the topmost Chinese elite, that you do hear more openly expressed concern about the potential of the Biden administration to cause more problems for China than even the Trump administration did. I think there's worry that the Biden administration promises, in some respects, the worst of two worlds. That it will be just as tough on China as the Trump administration was, but it's also going to be more effective at reasserting leadership on the global stage, more effective at building coalitions, pushing back against China in places like the United Nations. I would just note that, in Cui Tiankai, who's the Chinese ambassador to the United States, in his speech last month, he talked about, he said, any U.S. effort to build a coalition in Asia to balance against China would fail. That it was basically like putting, old wine in a new bottle. But I think, anytime someone tells you that something's going to fail, you know that they're worried about it. So I do think it's important to recognize that there is concern about the Biden administration, that it will take what the Chinese had thought was really just an economic and technological competition and add a layer of values onto it. And finally, I think there's also just a little more humility among Chinese scholars and analysts in the sense that they recognize that China has caused some of its own problems, that it's alienated a lot of countries with its wolf warrior diplomacy, that there are problems in the Belt and Road Initiative, and that these may offer opportunities for the United States, to capitalize on.
In which you hit zero interest rates. There's the printing of money, the creation of debt, and that has an impact and threatens a world reserve currency. So in that piece you described, the changing world order, which anyone, excuse me, I didn't silence my phone, so let me just shut that. Sorry. The changing world order, you can see this going back. It's on LinkedIn if anyone wants to read it, but you hit zero interest rates. You can't stimulate in the normal way. The production of a lot of debt, and that has an effect on the reserve currency status and so on. And so I've studied over the last the 500 years, these three cycles of the rise of the Dutch and the Dutch guilder, which is the world reserve currency, the British pound, and so on. Those patterns that are existing today with the production of debt necessary to stimulate the economy and the value of money is number one. The second, which is related, is the size of the wealth gap, and with that, the size of the opportunity gap and the values gap and the political gaps. So that's the second factor, and it's very related. And the third is the rise of a great power to challenge an existing great power, China. The three things. They're very interrelated. And so when we're looking at the picture, I think we have to look at all three of those related, and they've repeated through history. Each one of those, I just use statistics to measure, like a health index. Each one of those is most analogous to the 1930s period. We can talk about what historical periods, but it goes back to prior to that. So there is an economic and capitalist cycle in which the boom creates debt and an overextension that reaches a limit. And that in turn, if you have this mix, if you have a lot of debt and you have bad balances and you have a big wealth gap and a big values gap, and you have an economic downturn, and you have a rise of a power challenging an existing power, you have internal conflicts and wars.
Stuff, and its Navy. Every year it launches about 3 times more warships, than we do. Every year, the size of its Navy and the capacity and destructive strength of its Navy for asymmetric warfare against the biggest Navy of all rises and rises and rises. So when we have rather warmer relations with China, they keep on building. And when we have rather soured relations with China, they keep on building. And then when we have a summit meeting in Hawaii or whatever, they keep on building. So there's something just eerily substantive and, I wouldn't say ominous, though you may think the word is ominous. It is attempting to shift the overall naval strategic balances of the world. And by my money and by the mention that Ray's describing, we are pretty close to talking about a rising contender for the number one position in world affairs.
If you have a bad financial situation and you have a lot of debt, so if income is less than your expenditures, and you have a bad balance sheet, and you have a lot of debt, and you have an economic downturn with a large wealth gap, that is the combustible combination that produces the problems. In the case of, I'm just trying to make the comparison with China. In China, besides their income statement and balance sheet being better, their living standards are rising. Since I've been going there. So there's contentment, there's excitement, there's happiness there. There's a large wealth gap, but that's when the living standards are rising. Per capita income, when I started going there since 1984, it's risen 22 times. The poverty rate has declined by 88. The life expectancy's increased by 10 years. So there is not discontent. There is a wealth gap that's analogous to us. It's top of mind, but the boat is rising. And so it's an environment in which there's enthusiasm in China more than there is the feeling here when you're having that decline and you have a debt to deal with it. So that's a big difference.